Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. Special weekend report for May 11th, 2019. On this report, what I would like to do is review the Seeking Alpha report that we published on May 9th, entitled E-mini S&P Bearish Reversion Completed and Perfect Bullish Setup in Place. On this report, we examined the E-mini S&P action on a report that we published on May the 3rd. On this report, we anticipated basically that the market was going to be sharply lower from Friday, from the previous Friday's report, from the previous weekend report, and that if you are short, with actually the market closed at 29.43 on May the 3rd, and it told you basically that if the market was to come down below 29.37, which was the weekly average for last week, that it would activate the extreme levels below the mean of 29.11 to 28.76. On this report, we told you basically where to cover your short positions. If you're short between 29.11 and 28.76, that is the first indicator that the VCPMI artificial intelligence tells you if you're coming into this week, and if you were short, where you cover your positions, first of all. Then the VCPMI artificial intelligence gives you a trigger point, and it tells you after the market comes down and activates these levels, then you want to wait for the price after it comes down to close above it to activate the trigger point. And the B2 level coming into last week was 28.76, and we pretty much specifically made it clear to you that if the market breaks 29.37, that the levels of 28.76 should be looked at as a buying opportunity. And in this particular situation on Friday, the signal came in on 5:45 a.m., long at 28.80.50. I published this, and I gave you a stop on a close below 28.76. This signal was a weekly signal if you look at the weekly report. Therefore, the market had to close below 28.76 on Friday, the end of the week, in order to stop you out. Let's take a look at what the market did basically after making a low of 28.26. It met the target pretty much of that 28, 29, 30 area of the VCPMI B1 level of demand. And the VCPMI artificial intelligence tells you on the first bar, it's a setup. You don't do anything until it closes. The second bar close activates a signal for you. If it closes above the pivot point or the entry level, it is a buy signal. Automatically, your stop becomes the level below. And in this case, on the 10th, at 7:45 a.m., the market, after testing that 28.29, closed at 28.31 Automatically, your stop is that level below. In this case, that 28.29, 28.30 level. The artificial intelligence tells you that if you have a conservative trade and you buy under close, you put your stop if the market closes below that level. the VCPMI artificial intelligence automated algorithm automatically activates the target above as your exit point. And in this case, the 2884, 2883 was the level that was telling you that essentially for you to take profits and go neutral again. And what we have here, if we examine the chart, is a perfect example, a classic example of what the artificial intelligence of the automated algorithm, the variable changing price momentum indicator, tells you that when the price reaches a buy one level, you have a 90% probability of a reversion occurring back up to the mean. And in this case, this is a perfect classic example of what the VCPMI artificial intelligence automated algorithm tells you what to do as a self-directed individual. One of the important things that I tell my subscribers, my traders that learn to use this incredible trading tool, this mathematical trading tool, this probability model that we're looking at called reversion to the mean, is that when the price is trading around the average price, and in this case the 2884, it's usually a standard deviation 50-50. You want, as a self-directed trader, buy the highest probability that you can. And so the VCPMI artificial intelligence tells you, wait until the market either comes down to B1 or B2. When you're at B1 or B2, you're in an area of accumulation of demand, the highest probability for the price to revert back to the mean. When you're in supply or in red, and in this case, coming into next week, the sell 1 level is 29.41. The sell 2 level is 29.96. With the price closing above the average price of 28.84, it has activated the sell 1 level of 29.41 for next week to 29.96. If the price is activated, go neutral. If the price closes below 28.84, it activates a bearish trend momentum and activates the buy 1 level below of 28.29 to the buy 2 level of 27.72.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.